Hi, everyone. Welcome to our third Wednesday webinar. We're glad you guys are with us on this rainy day. I know being in quarantine and raining is no fun, but thank you all for being with us. You are all muted for the webinar. And this webinar will be recorded so we can come back and share it if you want to watch it later. We have a filled webinar today, so I want to jump right in. The Community Foundation does have a few announcements. You should have received your nonprofit assessment, which is the survey that we're doing to help kind of see where everyone's at. If you please fill that out by Friday, many of you have already done so, but we will share the link after the call. Please make sure that you're able to fill out that assessment. And then we also have the needs request form, which is where you're actually putting in your request for funding if you need funding. And so, or any, not just funding, but any needs. Please go fill out that needs request form. You can find on the Community Foundation's COVID-19 page if you go to our website, and that is what all funders in our community are using. So United Way is using it, and the NCF Cares page, which was formed by United Way and the Community Foundation to help get relief funds out in our community. So those funds that we are collecting from there will be granted out using that needs request form. So just some quick updates, and we want to jump right in to the webinar. So first up, we have Steve Kattell. Many of you know Steve. We've done quite a number of trainings with him through the years, and so Steve is going to help us to answer some of your questions around keeping your policies and procedures up, and really particularly related to things in your finance department during this crisis. So Steve, I'm going to unmute you, and I know that Steve had some points he wanted to share with us as well, a screen. So let me unmute Steve, and we can get started. All right, Steve, you're unmuted.
I am unmuted. Okay. Well, welcome everybody, and my blessings to one and all during this unprecedented time. Leslie called me up and asked me if I would present some best practices for managing a finance office in a crisis. And I must admit that this is unprecedented, and I don't know that I have that many best practices to share. But I did put together some thoughts, and we'll go through them briefly. I think the main point that I'd like to, the main thought I'd like to get across, hopefully, is some validation that you're doing things okay. You're all right. We are in a crisis. You're going to need to do things differently. Communication is not going to be the same. So what can we do to have a good finance office and to have good controls? And that's kind of the main thing when the normal control process, normal accounting and control processes have been interrupted. I've got a little set of talking points here. But again, main thing is if we can answer any questions. So if you've got any questions, anything that was burning on your mind, please go ahead and type that in. And we'll kind of go through this little presentation here quickly and hopefully have time for a little Q&A. You'll see I've just kind of talked about, our priorities, focus on the essentials, strip down your operation to the bare bones. What is the most important thing for you to do right now? The most important thing for you to do is keep the lights on, keep the doors open. And to do that, you're going to have to pay the essential payroll and bills. For most of us, it's payroll to payroll. Do we have enough money to make the next payroll? And there's nothing wrong with putting everything else aside and saying, okay, do we have enough for the next payroll? In fact, I think a lot of organizations operate in that basic mode. So we're still there. It's a little more critical now. But you got to keep the lights on. You got to pay the bills, you got to pay the payroll. Well, you got to keep the money coming in. And so, yeah, we need to make the bills, but we also got to keep collecting the money. We got to keep invoicing. We got to keep contacting the donors and being in touch with them. Stay focused on it. We got to keep our customers. We got to perform those essential services. I know here at Kattell & Company, some of our clientele are not available for whatever reason. They're just not working now, or their revenues have been completely cut off. And so, they've called us up and said, yeah, we really can't do the audit right now. We want you to be our auditor, but we're going to have to wait a little bit for that. We understand that. So we're certainly in touch with our customers, calling them, asking them how they're doing, what we can do to help, and certainly reorganizing, rescheduling. I should have keep the donors up there as well. You know, there's nothing wrong with being on the phone. There's nothing wrong with sending an email. And that was primarily, I think a lot of our communication was that way. And so we can keep doing that. So, you know, over the last couple of weeks, I've been on the phone with a lot of the clients and just talking to them, where are you at? It's interesting, a lot of our clients, because they're not focused on a lot of other things, they have time to do their housekeeping. They have time to work on their tax returns and their audits. And so we've been able to shift things around for ourselves. So what's that going to look like for you? You know, batten down the hatches, interesting term that comes from the nautical world when a storm is coming. Secure the facilities, secure the data, secure the cash. And we're going to talk about internal controls very quickly. Securing the data, you're going to have to talk to someone a little more expert than me. I've heard a lot about more and more people are online more, and they're using maybe less secure systems. Certainly whatever you need to do, talk to a professional. That wouldn't be me on this area. And make sure your data is secure. Securing the facilities, I'm sure you know what that looks like. Again, secure the cash, we'll talk about that. What do we need to keep going, and who do we need? You know, all hands on deck, rally your resources. And again, although a lot of people are unavailable at this time, there are also a lot of people who maybe aren't working as much, maybe aren't socializing as much, but have available time. And so it's a good time to maybe broaden that resource base. Who is available, who maybe otherwise wouldn't be? Who's available now because they see that this is a new situation and they want to step up? My daughter is one of those people. Her job sort of went away. It was sort of an event-based job, and we don't do events anymore, not in-person events. And so now she's sewing masks because she loves to sew. And anyway, there are people like her out there who, you know, they're okay financially, and in a short period of time they can do stuff. So keep that opportunity in mind. You know, I talked about resources, who has what you need, who's available, employees, volunteers, already talked about that. I know there have been previous Wednesday seminars talking about emergency governmental agencies, SBA funding available. I'm sure a lot of you have heard a lot about that. And if you are still questioning about that, there's plenty of information. I'm sure the Leslie and the Community Foundation can get that to you. Did I go like this? You're still muted, right? Okay, Leslie's got that. I didn't speak out of turn. Other community resources, well, obviously you're all here because of the Community Foundation. You know they're available. The Chamber is also available. United Way is available, and they are each providing a service that fits their skills base and what they do. So again, all hands on deck. It's time to, you know, eliminate the superfluous, focus on what we need to do to make it through this time. And let's talk a little bit about internal controls. If you've heard me do a little thing on internal controls, for the most part, I focus on cash. If you are an entity that has other assets other than cash, or investments or that sort of thing, you know, physical assets, well, that's in the secure the facilities section. We're not going to talk about that here. But what do you need to do to make sure you've got internal controls? And again, I want to focus on what's the essential internal controls. The essential internal controls are over disbursements. You need 2 people involved in every disbursement. And that doesn't necessarily have to be on the front end, you know, before the check goes out, but it should be immediately afterward. It should be on the back end in a timely fashion. What do I mean by that? Well, at least every month, someone needs to be reviewing that bank statement. And I can't emphasize enough how important it is that somebody other than the person primarily responsible for disbursements is looking at the bank statement, someone who is knowledgeable about what appropriate disbursements are. If you've got those two people looking 100% at every disbursement, either before they go out and after they go out by review the bank statement, that's the essential control you need. And pretty much anything else, it can be set aside for right now. But you do need to keep that kind of control in place. As you can see, the bank statements, this is essential. A lot of people say, well, there's 2 signatures on every check. Well, that's great. But what about the fraudulent check? Well, there's not 2 signatures on that one. And banks don't check for 2 signatures. So, the whole 2 signature thing really doesn't help that much. You've got to have someone on the back end making sure the primary person who's making disbursements isn't paying their own bill. And you'll check that on the bank statement. For receipts, this might be a little more challenging. You certainly want to separate the accounting from the cash receipts process. I like to say that as a rule of thumb, for every person who touches the cash before it gets in the bank, you got to have someone else checking over that person. So if the cash gets passed around, and when I say cash, I mean cash and checks. If the cash gets passed around to more than one person before it gets in the bank, you got to have control process over each one of those. And that might not be that hard, but what I like to do, what I think is the best practice, is you have one person receive the cash, make the deposit, take it to the bank, or do remote deposit, whichever you do. And then you've got other people who are checking that and who would have knowledge of whether that's an appropriate cash deposit or not. What do I mean by that? You got someone else who's looking at the receivables, someone else who is looking at the invoices and knows who should be paying and who shouldn't. Someone else who's managing the donor database and who's sending out the donor acknowledgements. Someone else other than that person who grabs the cash, puts it in the bank. So I have just really briefly gone over the essential controls for cash receipts and disbursements. Certainly it's more complicated than that. If in this time of transition, you have some normal control processes that you are going to need to suspend for a little while, I think it's okay, but I think you ought to get approval for that. Run it by your finance committee. Certainly have your executive director or finance committee, board treasurer, someone outside of the group that is suspending that set of controls. And that way you got it documented. I always say transparency is the key. Make sure that you're real transparent about what you're doing and why you're doing it. So again, you may suspend controls or normal processes for a short time, but then you've got documentation that was a thoughtful process. As I've already said before, look for new opportunities. There may be processes and controls that you've been performing. You really don't need to. I know here at Kattell Company, we've been thinking, well, do we really need to do that? No, probably not. Probably we can do something that's a little more efficient. Certainly, we're all going virtual. If you haven't already gone virtual, you are now. There's been a strong push by some of the banks that I deal with. Quit writing checks. Consummate more transactions electronically. They encourage online bill pay. ACH payments are common. They're a little more expensive, but certainly on-by bill pay. I think most banks do those for free. Sometimes they're more efficient, and they certainly reduce the risks of fraud. The bankers I talk to say, those handwritten checks out there anymore, you get the route number, you got your account number. It's easy for someone to produce a fraudulent check from that. Receive more money electronically. I think the biggest risk of skimming, that is taking money off of the receipt, comes from actual written checks that come in the mail or come to you by person, or certainly currency. The more you can receive electronically, the better. Now, certainly there's a cost to that, debit card, credit card transactions, PayPal. There are some ways to receive money electronically that don't have a cost, but those can be a little more cumbersome as well. Anyway, the more you can move there, the less risk of fraud you have, and perhaps there are some efficiencies. Work from home, you've always wondered if this could work. Well, now you know. And I think it's interesting. I've got this nice big office, and there's one of us here every day now. And sometimes others come in for a short time and do necessary things. But a lot of people are enjoying working from home. There's less commuting. And it's the experiment we never tried to do. So it'll be interesting to see what the new normal is for Kattell and Company after this. I think we all should stay open and look for those new opportunities. Certainly question your processes. We've always done it that way. I hear that so much. I talk to people, you know, my staff who complete a tax return. Why'd you do it like that? Well, it was done that way last year. It's never a good answer. Again, question your processes. Is that really an important control process? Does that really achieve our control objective? Or is it just something we've been doing because we thought we were supposed to, or maybe we think some auditor said we should do that 5 years ago, but it's really not applicable. So it's not a bad time to, you know, consider those processes and see what you might eliminate. And I already mentioned that, but you know, find those new donors. Some donors are more likely to give in a disaster, just know that those opportunities are out there. That's what I've got in a presentation. Do we have any questions?
Steve, we have a couple questions coming in. Some people are writing just to me, and that's fine. So please put your questions in the chat, and you can either write them to everybody or write them to me, and we'll make sure that you get them. But a couple questions we've had so far is, you talked a little bit about how to put cash in the bank, but what about deposits? What about somebody's asking about checks and balances for deposits?
Yeah, that's the most challenging part of internal controls is deposits.
I assume they mean since they're working from home.
Say what?
So since they're working from home, how do they do that?
Well, you know, the first thing I would say is see if you can't transition some of those deposits to electronic deposit. We've got more and more clients who are paying us by ACH, which we love. We still have a lot of clients who pay by check. So where are the checks going? I haven't checked this. Maybe someone else on the call knows, but can you get the post office to reroute during this time? So the question is, where are those checks going? I think it's a necessary process to keep things going. For you to have someone still has to go to the mailbox and grab those checks. As I said earlier, I will repeat. I like it when just one person has access to the cash and puts it in the bank, takes copies of everything, makes a complete record of what was deposited, and then other people are available to review that and make sure that's the appropriate deposit. I had one client where they had dual control. What do I mean by that? Two people went to the mailbox and they both opened it at the same time. And that was what worked for them. That probably isn't working for them for now. And that might be one of those control processes that you might have to suspend for a little while and just accept the risk. There may not be anything you can do to keep that person who is going to the mailbox to get, and if they can figure out how to take a check and cash it to themselves, which the real good crooks can do, but I haven't seen much of it. If you've got checks coming in, I like to say limit it to one person. They might be able to figure out how to steal it, but only the best crooks can. The best crooks can, and you usually like to mitigate against it, but not at this time. Not sure I answered your question. I hope that was something else.
This question goes along with it. This is from the same person. So they're saying if we're changing some of these policies and procedures, what's the best way to do that so that the auditor doesn't come back and find it later, or they get in trouble for it later?
Call your auditor. If any one of my clients wanted to call me now and say, gee, Steve, what do you think about this? I'd kick it around with them. I'd say, well, okay, do you have any other, what are your available? And they might say, our resources are limited. And then I would say, okay, get your board to sign off on that. Get your finance committee to sign off on it. Say, okay, we're accepting a little risk now. And we're doing that in a temporary situation. Have a time certain for the next month or two, and maybe you'll extend it later. But talk to your auditor, come up with whatever that new process is, and know that that's the best you can do. There may be circumstances where you really can't have optimal controls during our social distancing time, and I think that's par for the course. I can't imagine. The worst that an auditor would say in that situation is, as you well know, you had a risk during this period, but that, I don't know if an auditor would write that up or not. But.
And we have a question here about, do most banks allow mobile business deposits or image deposit?
I don't know what a mobile business deposit is. Anybody else know what's a mobile business deposit?
I assume it means like when you take a picture of the check and deposit it. I assume that's what they mean.
I think a mobile, taking a picture is just as fine as taking it to the bank. I don't think there's any benefit to taking it to a teller or putting it in an ATM machine versus taking a picture of it. The key is that you've got full documentation of the deposit, and certainly taking a picture of it provides the full documentation. So I would not have any hesitation with that kind of process.
And this is kind of diverting a different question, something you didn't touch on, but somebody's asking, is there a schedule of when their 990 due? Has that changed?
Oh my goodness. Over the last 2 days, I've been arguing with someone up at the AICPA. The AICPA and the IRS have put out these little emails saying, don't worry about your 990. It's been extended to July 15th. And then both the IRS and the AICPA have referenced an IRS notice and an IRS FAQ. And the IRS notice and the IRS FAQ, neither one of them say the 990. They say 990T, they say 1040, they say 1065, which is partnership, they say 1120s. They say everything, they even say trusts and estates and all these other things I've never looked at. But they do not say the 990. If you're a December 31st year end, you can easily extend at the May 15th deadline. If you're a June 31st and May 15th of 2020 is your final extension, other than these emails, I have not found anything that allows you to file after that date. I can pass along the because it says in the language of the email from the IRS, hey, don't worry about the 15th, May 15th for your 990. But you read the detail, it doesn't say that. So
where can we find up-to-date information on that? Where's the best website for us to stay up to date on that information?
Just irs.gov, charities, /charities and nonprofits.
We'll try to send that link out. And
yeah, we'll
also on here, you referenced AICPA. Somebody asked what that reference was about.
Well, the American Institute of Certified Public Accountants is the professional society of CPAs, and I'm a member of the not-for-profit section, so I have to pay extra, and they sent out a little email as a section member, and it's the staff liaison at the AICPA that I was talking to, that I know, and I can send both of those emails, forward both of them to Leslie, and then she can, if you want, Leslie, is that something you can do? And then Leslie send those out.
So
the problem is, if you look at the detail, it doesn't support that. So anyway.
So we have one question that's a follow-up to the question that was asked about the check deposits. And this is, how long should someone hold on to the images of the checks once they take a picture to deposit?
Well, that's a good question. If the image is in your bank statements, I would say you don't really have to hold on to it for very long. Just make sure that it's in the bank statement. And then I would think that would be fine. But And anybody use desktop deposit or remote deposit? I think there are SOPs for how long you're supposed to keep those checks. I think they say that, you know, once it's scanned, you're supposed to destroy them rather quickly. So I think once there's an electronic image stored and available and in a secure location, I see no reason to keep the paper for very long.
Great. Thank you, Steve. So I definitely want to be conscious of time and get started with our next presentation, but you have any final thoughts or words of encouragement for our nonprofits during this time?
Oh, we just, we're all in this together, and anybody wants to kick some of these ideas around with me, I'd be glad to talk to them. Leslie has my contact information. You can look me up, Kattell.com. There aren't too many Kattells out there, so it should come up pretty quickly. Anyway, stay strong. We really appreciate all that you do. I mean, nonprofits serve a lot of people, and you're the people on the front line. And so keep up the good work, and appreciate being with you this afternoon.
Thank you so much, Steve. And if you're going to hang on with us for a little bit, if people still have questions, they can write them in the chat. We'll make sure that you get Steve's information. So thank you so much. That was very helpful. Another thing that we've been getting, the Community Foundation's been getting quite a few questions about has been what's going on with the CARES Act. We hear a lot about the payroll protection, and I know we did a webinar on that, but we have a quick update with our next speaker. So we have Corinne Turcotte here with James Moore. She's going to do a quick little update about what's going on with that. So I'm going to unmute Corinne. And then right after Corinne, we have Julie Kniseley with James Moore as well. And she's going to be talking some more about answering all of your HR questions. We've been flooded with your HR questions that we have not been able to answer. So we definitely wanted to get somebody on that was an expert at this and could help us. And so Julie's going to be answering those questions right after Corinne. So we'll start here with Corinne to give us a quick update on what's going on with CARES. All right, Corinne.
All right. Thanks, Leslie. So like Leslie said, I know HR is the hot topic of the day. So I'm going to make my recap here pretty quick and then throw it over to Julie to go over the Families First Act and the other HR questions that you guys have. But before we get into that, I'm going to do a quick recap of some of the other relief provisions, which I understand you've already covered in a previous webinar. I just want to note, make sure that you understand that this information is changing by the day, really by the hour, honestly, for some of it. So what was true a week ago might not be true today. So it's very important to make sure that you keep up to date on the latest information. You can go on the U.S. Treasury website or the SBA website directly, or if you want to just kind of get a consolidated resource page on our firm's website on jmco.com, we have a coronavirus resource page. So you can go there as well, because we're keeping it updated with the most updated information, because that is changing pretty frequently. So the two big relief programs that you've probably heard of under the CARES Act in terms of loans are the Paycheck Protection Program. That's kind of the big one. This is the one that's available to employers that are under 500 employees, and we're in operation as of February 15th, 2020. A couple of things that I kind of pulled out just to note for nonprofits specifically. This is only available, based on everything I've seen, to 501c3 and then also C19 veterans organizations. So if you're a C4, C5, C6, unfortunately, you're not going to be able to get this paycheck protection loan. There's also some affiliation rules that go along with this that can affect nonprofits. So if you are like a branch or you're rolled up into a larger organization and you're considered, to be one organization, then you may be over the employee cap in total when you apply those affiliation rules. So this can get kind of complicated, and if you're not sure, you probably need to speak to your CPA or your attorney to kind of talk through your specific situation. It has to do with, control and board composition. You don't necessarily have to be consolidated up into another entity for those affiliation rules to kick in. And there is, from what I understand, an exception for religious organizations to that affiliation rule. So for example, a Methodist church, they're not saying all Methodist churches are rolled up into the Methodist church. They are able, churches, from what we're seeing with current guidance, are able to apply for this Paycheck Protection loan. The other thing that I wanted to mention that I've been getting a lot of questions on from my clients is related to the good faith certification. So the eligibility requirements for this loan are fairly loose, and basically the good faith certification, you just have to say that you have to attest that this loan is needed based on economic conditions. So personally, I think there's certain situations where this could be iffy, but I think the vast majority of nonprofits can safely assert that at least one funding stream has become uncertain, whether that's donations going down due to a downturn in the economy, whether you had to cancel a special event, your supply chain was interrupted, any number of things I think can be used to meet that certification. So I don't think that certification is really going to weed out very many people. So I know I've heard a lot of people who are nervous about that. I wouldn't worry about that too much. I would just understand that the part of this that is still really open to interpretation and that we're really waiting on more guidance on is how are we going to calculate the forgiveness. So just understand going into this, I think, I'm trying to tell my clients, be prepared that you're probably going to have to pay a portion of it back. There's a pretty good chance that 100% of it won't be forgivable. But even if you get it, 75, 80, 90% forgivable, that's still a pretty good deal in most circumstances. So the other program real quick that I wanted to touch on was the emergency disaster loan. This is really just an expansion of an existing program. To be honest, I haven't really been doing too many of these. They're administered directly through the SBA, and the SBA has a ton of information on their website. So if you want to look into that emergency disaster loan, you can apply for both the PPP and the disaster loan, but they get rolled up into one. So just, you can't apply the same expenses to both loans. So then just anecdotally, a couple of things that I've been seeing with my clients as we've been, calculating and processing these loans, there have been some clarifications through FAQs that were provided by the SBA and by the Treasury. And, one of the questions that's been coming up a lot is, well, if I rushed and got my application in and I applied based on the set of rules that was in place at that time, do I have to go back and redo my calculation? And the answer that we're getting is no. And actually, I think they're not even allowing people to go back and recalculate if you've already been approved. There's some instances where it may have been beneficial if you were going to go back and recalculate under clarifications of guidance, but the FAQs say that whatever guidance was available at the time of your application, that's what you should go with. So other than that, I would just say, in terms of the process, I've been getting a lot of questions of like, how long does this take? What's the backlog like? What bank should I use? I think what I've seen the most success with is clients using bankers that they have a good relationship with and they have an existing banking relationship with. When this originally started, most banks were only working with existing clients, and the process has been moving much more quickly through community banks and through credit unions than it has through some of the larger banks. So the only situations where I might consider having you shop around, so to speak, is if your primary banking relationship is with like a Wells Fargo or a SunTrust. It may behoove you, if you have a banker on your board who works for a local bank, to reach out to them and see, hey, is this something that you would be able to process for us? And could you, get us in the queue? How long would this take? Most of my clients are getting approved within a week. When you get approved, you get a loan number. And then once you get the loan number, the bank has approximately 10 days to actually, underwrite the loan and disperse the funds. So it does take, probably about 2 weeks to actually go through the whole process of actually getting the funding. But that could be a lot longer if you're working with a larger bank who has a lot more organizations in their queue. So something to consider. A lot of banks are also starting to relax their restrictions. A lot of them are now saying they will work with organizations who they're not don't have existing banking relationships with. So something to keep in mind if you have not started this process yet and you're thinking you want to jump in, I would encourage you to do that as soon as possible. There is some question as to whether or not the funding is going to run out. My gut is that Congress is probably going to approve more, but they haven't yet. So the last time I checked, which was Sunday, they had earmarked $205 billion of the $350 billion that's available. So they are, getting close to that limit. So I do encourage you guys, if this is something you're interested in, reach out to your CPA, reach out to your banker, and get the process moving, because I do think it's something that you definitely want to get in line as soon as possible. So that's everything that I had on the loan provisions under the CARES Act. So we can go ahead and throw it to Julie for the HR sections.
Thanks. And as Julie's talking, if people have questions, they can write in, and we'll do questions for Corinne as well. So Julie, you should be unmuted. Oh, sorry, it's taking a second. Let's see if you have to. There we go. There we go.
Okay, now can you hear me?
Yes.
Okay, I'm going to do a kind of a Reader's Digest version of the FFCRA. And I could go on for at least an hour about this part that it happened the week before the CARES Act. The FFCRA was passed, which provides for paid leave and expanded FMLA for certain types of organizations. And some organizations and some clients I've talked to, because they're small, they didn't think they had to worry about this. And you actually do have to worry about this, even if you only have 2 people, 5 people on your payroll. And I'm going to explain why. So under the FFCRA, it's providing for paid time off for people that have to miss work due to COVID reasons. There's 2 parts of the act. One is paid sick leave, which provides 2 weeks or 80 hours. And the other is the expanded FMLA, which is just for childcare. If you have under 500 people, similar to what Corinne said with the CARES Act, if you have under 500 employees, then this is a mandatory provision that you need to follow. There are some exceptions if you have under 50 people. If you have under 50 employees, the exceptions are if you are a healthcare provider or if you are an emergency responder. These definitions have expanded a little bit, and again, similar and echoing kind of what Corinne said, is the Department of Labor has been trickling out the guidance on this since they passed it 2-3 weeks ago. And the answers are changing. So what I say to you today is maybe in some cases different than what it was last week and what it was the week before. So we're having to kind of, as somebody I talked to yesterday said, that we're flying the plane while we're actually building it at the same time. So just keep that in mind. You always have to kind of look for what the latest guidance is. The Department of Labor actually changed one word on one of their Q&As, which completely changed the meaning of one of the sections of this act. So again, if you're under 50, you might have an exception if you're a healthcare provider or you're an emergency responder. The only other way you get an exception is for the child care portion of these 2 acts. So the paid sick leave for someone who may be ill with COVID or is under a quarantine order by their healthcare provider or has symptoms and they're trying to get diagnosed, you have to comply with this and follow the paid leave portion of this act. There is a lot of resources on our website that'll tell you a lot more information. The Department of Labor has put out a Q&A. There's a mandatory poster. So while we're all in lockdown and supposed to be working remotely, you have a poster that you need to actually put up at the workplace or email it out to your employees. However, if you have an intranet, you would put it out there, but it doesn't release you from the requirement just because you're small or because your office is closed. So keep that in mind as well. One of the things that I've talked to a lot of clients, and I know you all have questions about, is furloughing employees, layoffing employees. What do you do? So if the paid sick leave and the expanded FMLA would apply if you actually are keeping your workforce and keeping them on payroll and keeping them working. But what if you can't do that? What if you just can't, you don't have the money to do it, you don't have a loan, et cetera, and you need to consider furloughs or layoffs. So one thing I want to explain is the difference between those 2 things. So a furlough is generally going to be more temporary in nature. you keep people active in the payroll system, but they either go to 0 hours or they might go to a reduced work schedule. Generally, when you furlough employees, you know it's going to be for maybe a month or two, certain number of weeks. You're going to bring them straight back. They retain their benefits generally during that period of time if you offer health benefits. As a side note, I know a lot of the carriers are forgiving the hours requirement right now, so that if you do furlough people for 1 to 2 months, you can keep the health benefits going in the same condition you did before without having to worry about following healthcare rules and making sure they work at least 25 or 30 hours a week, that type of thing. So one of the questions that I received prior to the webinar today was, how do you know if it's right to us? Really hard to answer whether it's a furlough or a layoff. A layoff, let me explain that. How's that a little different? A layoff is generally more permanent in nature. You are removing somebody from payroll. They're going to stop their benefits and go on COBRA if you're big enough to offer that. They're going to go out and get, in both cases, they could go out and get unemployment. I'm going to talk about that in a little bit. But generally, a layoff is for a more extended period of time with no planned kind of recall date, because you just may not know. It could be 6 months or longer, etc. But it's just more semantics between the two things. But a furlough is generally something where you keep people on payroll. You're just not, they're doing unpaid weeks, or they're sharing weeks or something like that. So how do you know what's right for you? It's going to be based on your cash flow and what your budget is. Can you continue to afford to pay people? And if so, how long can you continue to do that? If you can't, because maybe you put in a loan application, but right now there's no money coming in, so you need to furlough them for now. Then if you get the PPP loan later, you may be able to recall them and bring them back in and then start paying them for that period of time. So that's some of the considerations that you want to look at. A complete reduction in force, to just give you the third piece, furlough, layoff, and the reduction in force. A reduction in force is permanent. You are just reducing the number of people that are going to be at your organization for the foreseeable future. If you have some kind of contracts, you need to be careful. I don't know who exactly the audience and the size of the audience is. I don't think we're dealing with any unions, but if you did, you'd be dealing with collective bargaining agreements and have to deal with all of those issues. The other thing I mentioned, again, with size, the WARN Act, if you have not heard of it, you can look it up. I won't go into detail again, but if you have at least 100 employees, then you still have to be concerned with the WARN Act, which provides a 60-day notice period in the event of a mass layoff or something like that, plant closing. What does that mean? At least 50 employees in a certain radius. And again, it only applies if you have at least 100 people in your organization. And if you do, please go out and do some research on that piece if that's something you're considering for a large group of people. Some states have started to forgive the WARN Act. Even California right now has suspended the notification requirement under WARN, just because this is such an extraordinary circumstance that we're dealing with right now. Any action you take, whether it's furlough, layoff, all those things, you know, I'm wearing my HR hat for a second, you need to make sure that you're making those decisions in a non-discriminatory fashion, that you're looking at the positions that you need to furlough, not necessarily the people, right? Because you don't want to all of a sudden find out that everybody you decided to furlough happened to be females over age 65, for example, and then have anybody question how you made the decisions on which people to furlough or to lay off. So you want to make sure you put a plan together. You have a lot of documentation that supports why you've chosen certain positions and what the reasons are. And same with recalling people back. You know, one of the obvious ones I've talked to a lot of clients about is if the office is closed, I really don't have anything for a receptionist to do. There's nothing that they can do remotely. They can't telework. So what do I do with that person? And those are some of the discussions you've probably already been having over the last several weeks. And with us not really knowing how much longer this is going to go on, even if you've been able to hold off and not really make some of these hard decisions, you might not be able to put that off for much longer. So just keep those things in mind. One of the other questions I got is, how do we communicate our plan or steps to our employees? Be honest with your employees. You know your workforce, but you don't need to go into, great detail about your finances if that's not something that you normally share with your employees. I think generally nonprofits are very open, obviously, but I would be honest with the employees and be honest with why you're making decisions, what the intent behind the decision is. If you had to furlough half your workforce, how you made the decisions, how you decided who to furlough, and make sure that you're being upfront with them, because you're going to want to preserve those relationships and those people for when they do get to come back and things get to, quote, the new normal that we're going to be under. It's very hard. Recruiting was tough, especially for nonprofits in a lot of cases before all of this happened. And if you have people that you lose because of this and they go find jobs somewhere else, it's going to make it very tough for you to kind of bring them back in or find new people to take their place. So good communication under all circumstances is always preferred, of course. One of the other things that I wanted to talk about is unemployment. That's something that we get asked a lot. I wish I had really great answers. I can tell you that the CARES Act set up some additional pieces to unemployment. So under the CARES Act, unemployment is being expanded to an additional 13 weeks. A lot of people probably already heard about the $600 that will be in addition to what the state pays, what the state pays. So an additional $600 on top of what would be the max in Florida of $275. So that additional $600 will go to July 31st. The other thing it does is, as I said, it expanded it another 13 weeks. So from 12, people would be eligible for another 13 weeks of state benefits. And it also opened it up unemployment to people that normally would not have been even qualified, such as gig workers, your Uber drivers or Lyft drivers, independent contractors, the self-employed. Sounds great. But unfortunately, what is happening in the state of Florida right now is the system is completely overwhelmed and no one's getting any money. They are so backed up in claims. I know people that have applied 4 weeks ago and have heard nothing. The system keeps crashing. They've tried to add servers. They've tried to add people to answer the phones. Excuse me. And if you call today, you could still get hung up on. If you're self-employed and you do manage to get through today, you're going to be told you don't qualify. They're really struggling with the amount of claims coming in and struggling with how to then implement the pieces of the CARE Act, because these are federal dollars coming through the state. The hard part is, under all circumstances, whether it's the federal piece or the state piece, it's been designed so that you have to go through your state system. So you have to go through the Florida DEO in order to get anything. The only good news is then once they can kind of catch up and get this fixed, hopefully, if you're eligible for $1 of unemployment by the state, you're going to get the $600 by the feds. But it could be several weeks before independent contractors and self-employed, underemployed. So if you furlough people, or maybe you take them down to 20 hours a week instead of 40 at half pay, they would also be eligible for partial unemployment, but they're going to have to get in line to a system that is still really, really broken, unfortunately. And we can only hope for the best. Additional guidance very much needed from the state on how all of this is going to work. And those are the questions that I had been given ahead of time. Has there been other questions?
There's a couple questions. I'm going to try to decipher the questions. So I hope I get them right. And please type right back to me if I'm reading it wrong. But someone's asking, what are the implications of potentially reducing salary employees in order to keep other staff, is what I think I'm understanding the question to be.
Okay, so taking a salaried employee and reducing their weekly rate in order to keep your hourly staff going. I'll kind of assume that I've gotten that. Yeah, I mean, as long as you've, one question is, are you reducing the workload too? But I would say for a weekly, for your salaried people, if you say, look, I'm just going to cut everybody by 20% so that we don't have to lay anybody off. Every salary person is going to take a 20% reduction in their weekly rate so that we don't have to lay anybody off. And you get that in writing and you get buy-in, you get all of the employees to agree to that. It's a very reasonable solution. And one that I think a lot of employees right now are like, okay, yeah, I'll do whatever I need to do. I mean, it's a bit of a burden on them because right now we need more money, not less money, right? But certainly that is a solution. I would tell you though, if you're, and Corinne may want to speak to this too, if she's still with us, I can't see her, is that you don't want to reduce your payroll if you have the loan sitting out there, right? You don't want to reduce your numbers or reduce your payroll.
Correct. There's two counts, two calculations that you'll have to do if you do have a PPP loan to determine the amount of forgiveness. One of them is based off of FTEs and one of them is based off of your actual payroll expenses. So if your payroll expenses are decreased, excuse me, by 25% or more, you're going to struggle with getting your loan forgiven. So it's something to think about if you have, if you are going through the PPP loan process. The point of that is so that you don't have to do all the things Julia is talking about. You know, that's kind of the whole reason why they have this program. So if you are in a situation where you've applied for and are receiving a PPP loan, you really need to be strategic in those 8 weeks about the employment decisions that you're making, because you could very well end up in a situation where if you don't do things the way, you know, that they want you to do it based on the final rules that are getting amended every other week now, you could end up with just a loan instead of a forgivable loan, essentially a grant. So just, I would strongly recommend people trying to put off, if you're in the PPP loan situation and if you have flexibility, put off any major decisions in that regard as long as you can until we have really good guidance on how that forgiveness is going to be calculated.
Mm-hmm. I see someone ask a question about FedEx is assisting. Yes, FedEx has the paper applications, so that the Florida DEO has provided paper applications that you can pick up and mail through FedEx. There's also going to be a way to do it online, to submit it online as a paper application online, but they haven't done that yet. But it's snail mail and it's still going to hit the Florida system, and they are so backed up. I was reading something yesterday that generally it was taking the state of Florida 4 weeks to process between 350 to 500 applications for unemployment, 4 weeks. And last time I saw, they had over, what, 500,000 claims coming in. So we have no idea how long this could take. Paper applications, certainly, I can just see them sitting in a big giant pile, and they're putting more resources on it now. But I think, unfortunately, we all are just going to have to be really, really patient. As I said, I know people that have applied 4 weeks ago and have not heard a thing, or the application is still saying they're not eligible when under the new CARES rules they now are.
Great. Looks like we had a question come in. It says the stay-at-home order requires that staff who have underlying health issues stay home. Given the situation, how do we manage decreased workload and health insurance premiums, as it isn't exactly a furlough?
Yeah, if they meet those qualifications, and keep in mind, if they have those underlying health conditions, first, are you an essential business or not? Are you considered an essential business or not? The other question is, can they telework? Can they work from home? Because if they need to stay home and they just, because of other health conditions, but they're otherwise healthy, can they telework? So there's other things you can do other than just having them sit home and do nothing. You want to look at those opportunities first. But if they have underlying health conditions, under that paid sick leave, you need to get documentation. If you go to our website, under that COVID resource page, we have sample templates that you can use or adapt, that you have to affirmatively get documentation from the employee. They have to request the time. You can provide them the opportunity to use it intermittently if you want, if they can telework, but they can't telework all day, kind of thing. There's a lot of nuances to this, so I'm kind of rushing through it. And please reach out to me individually, and I'm happy to help you and your organization directly. But there are some ways that you're going to want documentation, but it's only going to cover them for those 2 weeks. Under the paid sick leave, it's 2 weeks. So then my next question to you is, do you have other paid time? Do you offer PTO? Do you offer vacation time? What do you do after the 2 weeks is over? And it gets really messy, because then you have the Americans with Disabilities Act. Can something be a reasonable accommodation? What else? What other opportunities may there be for them to work part-time teleworking and part-time coming into the office? It's just so case by case. And if you have a particular situation, please reach out, and I'm happy to address that with you.
So we have, maybe we'll end with this question because this is an interesting question, but they're asking, as things move into the future, how do we require what are the HR rules for requiring sick people to stay home?
That's a really good question that I cannot answer in 4 minutes. Requiring sick, so that it gets really complicated. How? Sick as in you suspect that they have COVID? Sick
I assume that's what the question means as we start
I
back.
know, and it's really, the Department of Labor's guidance is continuing to get perfected in this area. I guess that's a good way to put it, because you've got guidance coming from OSHA, you've got guidance coming from the EEOC on what you can and cannot ask employees, and you have guidance coming from the Department of Labor. Certainly, when you open back up, we all want to know, what is that going to look like? What are going to be the requirements when we open up our offices? What are we going to need to do for the foreseeable future, as far as, do we check everybody's temperature on the way in before we let them come to work? Does everybody still have to have gloves and masks? What do we do for the public? What do we do about volunteers who want to volunteer? How do we make sure that people stay home if they are sick? What if they just have a cold? What if they have allergies? And like I said, there's a lot of guidance out there with the Department of Labor, the EEOC, and OSHA that have started to address some of these. But what we don't really have a lot on is, what are our rights as the employer going to be when we go back to normal, whatever that is. What can we make the employees do? If you have somebody that walked into your office today and you suspect that they have COVID, could you send them home? The answer is yes. But how you do it, what you can ask them, is all very complicated. HR, unfortunately, we just can never keep anything simple.
Well, I think we're running out of time for questions, but I will make sure that we pass out both Julie, Corinne, and Steve's information for any additional questions. I also want to share James Moore's website with your COVID responses. There's some great resources on your website, especially for our nonprofits as well. So we'll be sure to share all of that. We appreciate the three of you joining us on this packed webinar today, but really helpful information. So, and we know that information next week could look all different. So we appreciate you sharing us, and we'll share out the resources as well. And to our nonprofits, we look forward to communicating with you. We hope you'll fill out the needs assessment, which we'll also include in the email when we send out, if you've not already done so. And we'll hope you'll join us next week. Next week for our Wednesday webinar, we are working on the very hot topic of how to continue to fundraise in time of crisis. So we'll be joined by a guest speaker next week. So please join us next week at 2:00, and we'll be in communication. So thanks, everybody, and stay safe.
Bye.